a lot of what I've been thinking about lately is rural resilience and the connection between, businesses doing well in rural economies and businesses and people doing well in urban economies. And
Coming up, we're talking about how to build an AgTech company with Mackenzie Burnett of Ambrook.
Tim, I'm super excited for this conversation. We talk with Mackenzie about her journey building an AgTech company, a software AgTech company, and raising capital and what that looks like. Ambrook just had a really notable fundraising round. They raised $26 million, Tim, and they are building farm accounting. And really, we get into it in the podcast, but she's really positioned this as not just accounting for farms, but all kind of rural businesses and farm adjacent businesses, which I think kind of opens up the addressable market. And we kind of discuss that as well, because, $26 million is a big number. So you need a big TAM to justify that type of fundraising and subsequent valuation. So we kind of get into that and how she thinks about the business and the trajectory. So it was really, really interesting to dig into this one.
Yeah, super fun conversation. I think there's a lot of opportunities to grow with this kind of a business. Like once you're in accounting, are there opportunities on the financial services side? I think like once you have that in with a farmer, there's a lot of kind of like value added services and offerings you can kind of bolt on top of this business model. And interesting her approach on kind of the investors. We get into that on kind of targeting ag investors or more generalist investors, and kind of her approach and strategy there was super interesting. So with that, let's jump in with what's top of mind for Mackenzie.
First, a word from our sponsor.
The Modern Acre podcast is presented by American Ag Credit. American Ag Credit is a proud member of the Farm Credit System, which was created more than 100 years ago with the sole purpose of serving the financial needs of farmers and ranchers. From small farms to the largest agribusiness enterprises, American Ag Credit understands agriculture and how to structure customized financial solutions. Just like many of the guests we have on the pod, American Ag Credit recognizes that the evolution of agriculture is inevitable and exciting. Their goal is to be at the forefront of this evolution, partnering with producers to grow their future in ways they haven't imagined yet. To learn more about American Ag Credit and to receive exclusive access to reports from Terrain, a research and insight service of American Ag Credit, visit agloan.com/terrain or hit the link in our show notes. Hey, Mackenzie, welcome to the show. Good to have you here.
really great to be here. Thanks, guys.
We're super excited to chat with you and learn more about your background and work with Ambrook. But before we jump in, Mackenzie, what's top of mind for you right now?
At Ambrook, we build accounting and payment software for farms, ranches, and other agribusinesses. And the mission of the company is enabling our customers to become more profitable and more resilient, and ultimately, kind of keep the family-run business independent. And a lot of what I've been thinking about lately is rural resilience and the connection between, businesses doing well in rural economies and businesses and people doing well in urban economies. And I think oftentimes those can feel disconnected. A lot of what we've been thinking about at Ambrook is how business resilience is not just about the individual business, but it's about the whole supply chain. And we've also seen a lot of our customers, a lot of farms are not just farms, right? They also have, farmers are super entrepreneurial. And so there's all these different side businesses. And so Ambrook has had to grow to support a lot of different types of businesses, not just the farming or ranching entity itself. So yeah, I've just been thinking a lot about that and ways in which software can help, and in ways in which you actually have to lean on community or other types of incentive structures to help support rural resilience there.
Mackenzie, we're super excited to dig into your story and your journey with Ambrook. And we thought we would do it a little differently and kind of have a conversation around what it's like to build an ag tech company. Because I think we always hear the headline numbers, so-and-so raises X million dollars for their ag tech startup. We know the different various verticals, robotics and biologicals that are getting a lot of attention right now. But we thought we'd peek behind the scenes. You just raised a pretty substantial round, $26 million. You're building an accounting software for agriculture. So we're going to dig into kind of the journey and the story of how you actually do this. So why don't you kick us off with maybe where did this start? Tell us a little bit more about you and kind of what led you to this company.
Yeah, totally. So from the very beginning, I kind of grew up with more ag policy, I would say, context. My whole family, when I say my whole family, both my parents and my older sister worked at, my parents were retired at the USDA. It was a bit of a different context, I would say, very public service oriented. And I didn't think that I was going to go and work in ag per se, but in college, I got involved in tech. And then in grad school, I kind of fell in love with agriculture and the whole industry in my own way. I ended up working at my summer job was working at a firm that held a lot of water and agricultural assets in the Central Valley, and spent that summer of 2018 driving around talking to farmers about water. And I just honestly fell in love with the whole industry and ecosystem. But my only skill set that I had built was software. So I was like, okay, I don't have, years and years of project finance or farming background or anything. And so the way that I felt I could make a difference and break into the industry was through trying to solve problems through software. I think, as you guys probably know, not everything can be solved with software. It's like some very specific types of problems, and the way that software is financed oftentimes means that it even narrows down the types of problems that are able to be solved and scaled from a software perspective. So ended up talking two of my co-founders to about 100 different people. This is right when COVID hit, and just talking to folks about their problems, what was top of mind. And the thing that came up over and over again was feeling behind on finances, not actually understanding what folks' bottom line was, understanding true cost of production, feeling overwhelmed by paperwork. So we started Ambrook to try to address those types of back office problems. We actually started by helping connect a lot of producers to working capital during the pandemic. So we built a little tool that made it really easy to fill out all the USDA forms you need to do for CFAP, and then find and apply, send that to the right USDA office. So we helped a couple thousand producers with that process. And then about a year later, as we were kind of finishing up that tranche of CFAP funding and support, folks started coming back to us and asking, okay, well, now can you help us with EQIP or, like CRP or some of these other types of more ongoing programs? And we were looking at it and we're like, okay, well, can you send us your balance sheet? And that was you kind of heard crickets after that, because it's just like people didn't have real-time balance sheets, didn't have a lot of access to their financial statements. They didn't have sort of the one click deeper, not just did I make or lose money at the end of the year, but where did I make or lose money? What were my unit economics? A lot of these different pieces, what risk can I take for different projects that I would potentially want to take on? And so that is what led us down the rabbit hole of eventually just kind of rebuilding the accounting core and trying to give people a sense of time savings and relief at tax time. And that's really important, making it easier to feel prepared there. But so that people can also understand, our customers are now starting to be able to understand their true cost of production, right? Like, what was my cost per acre? How much did it cost me to produce a pound of milk? Can I scale up this hay enterprise, or just make more sense to buy hay and instead scale up replacement heifers if I had to pick between the two? Those are the types of questions we're starting to help customers answer now. And that's sort of the origin of doing that.
Yeah, it's cool to see kind of present day everything that you're addressing. There's a lot of like unique situations, like you mentioned, where it's multiple entities that are doing different things. It could be a trucking company or a land holding company that interacts with different entities. So that's a lot that I'm sure you learned over the way. But when you started, I'm sure it was kind of like finding a farm as a test case, and you kind of build from there. So maybe talk us through kind of how you iterate, how you scaled this up the past few years.
Yeah, totally. And I would love to hear how you guys found your first 10 customers too. For us, it was just, you throw everything, the kitchen sink at it. There was no scalable process for finding your first 10 customers. It is just, our first customer was someone we met at a RFP, Ranching for Profit, we went to. Second customer was an introduction through that person's sister. It was really just like, it was cold email, it was calling, it was experimenting with different marketing, it was showing up in person, different places. And really what you're trying to do, I think, in the beginning days, and what we were trying to do is just get access to the problem. And so just trying to, get enough people to give you real insight into their day-to-day workflows, such that you can build software to help support that, or build anything really to help build the product basically to help support those workflows. Because the devil, especially in farm accounting or farm finance, the devil's in the details, right? And so you have to really enable, people who are willing to invite you into their homes multiple times, so you can watch them kind of with their processes that they have, the receipt that they take a photo of, the shoebox of receipts, right? Like where they go to on their computer to click in their old system so that you can actually build better software. And so the very early days was kind of getting access to the problem. And then it was this happy accident, I think, that now has paid a lot of dividends, because I think we've built a company that is much more resilient and can move beyond just individual farms and ranches. But our second customer was a 5-entity operation, and that we didn't actually realize that when we started. We were just trying to help onboard their feeder operation to the software and move them over from QuickBooks. And then they were like, great, we've onboarded. Now can you help us with our other 4 entities? And by the way, none of them are farms. It was a trucking facility. It was Custom Services, LLC. And so that really, I think, from the very beginning, stretched us into understand that in order to support farms, we actually had to support a bunch of different types of industries as well. And I think that actually ultimately makes us resilient, right? Like as we grow, to be able to support a bunch of the whole ecosystem and rural economy around just around agriculture. And that's been something that I think was just kind of following our nose in terms of what was interesting or important there.
Mackenzie, what was like the key insight that you had here as you're having these conversations? You mentioned a bit of it, right? Of not being able to just support the farm, but farm adjacent, right? Like, what was the key insight that you had that you felt that, because there's other, accounting software out there. Like, what is I think the core insight that agriculture needs a differentiated product versus some, a QuickBooks or a Xero or something like that?
Yeah, totally. I think it was just that, like, despite being on QuickBooks or Xero and folks being really up to date, they were struggling and could not actually point to understanding what their true cost of production was. It can be technically possible to do a lot of things. It is technically possible to do anything with a spreadsheet, right, with Excel. But it doesn't mean that people actually will do that or have the years of knowledge it takes in order to actually learn how to do true managerial analysis on your books. And so what we kind of realized was that the thing that software can be really good at is taking these types of power workflows and making them really easy and accessible, no matter what your background is in that context. And so we just basically realized that actually there was something happening. There was some gap that existed because people were on these old systems and still struggled to understand what their unit economics were, or true COGS, or any of these other details you need to know if you actually want to understand if like replacement heifers is actually profitable, or if your hay enterprise is actually, you need to scale it up. We had one customer, for example, he went to King Ranch Institute at A&M. And so he had come in back to his family ranch and had come in with this master's with all this knowledge, and then was sort of looking at QuickBooks Desktop and really struggling, right, to like even figure out how to reconcile everything for the end of the year. And then ended up switching to Ambrook, and it made it a lot easier for him to be able to apply all those best practices, because we have some small features and big features that make it a lot easier. Like we allow you to do splits really easily across your different enterprises. We allowed you to calculate per metric, and so per custom metric, so you can understand like a cost per head, for example. We allow for concept we call internal transfers, which is basically where when there's a non-monetary transfer of value between one enterprise to another, in true managerial accounting, you actually want to be able to account for that, right? But QuickBooks doesn't. It makes it really hard, if impossible, to do that. And so it's about taking the things that need specialized knowledge and bringing them to the forefront. And then there's a lot of stuff in ag accounting that needed specialized knowledge. And so oftentimes folks just didn't end up doing it. Yeah, I think that's a pretty good summary of it.
Mackenzie, let's get into kind of the capitalization of the business. We mentioned kind of a big Series A earlier this year. Maybe just talk to us kind of what led up to that, what investors you're talking to, and really what's resonating with investors on kind of the mission that Ambrook has.
Yeah, totally. So yeah, we announced our total funding to date a little earlier this year. So we've raised $29 million across seed and Series A, and then announced the $26.1 million Series A. That was done that was co-led. So it was led a little bit earlier by Thrive Capital. And then it was led, the tranche that was led earlier this year by Dylan Field of Figma, which is a company that just went public a couple of days ago. And I think the biggest thing that resonates with, it's really funny, and actually I would love to get your guys' take on this as well in terms of what resonates, but I don't necessarily always talk about Ambrook as an ag tech. We are building software for farms, ranches, and agribusinesses, right, today. But really what we're building is a new generation of software that should close the gap for these types of businesses that are really too complex for something like a QuickBooks, but don't have the teams or resources to implement a Sage or a NetSuite, these more enterprise ERPs with starting, dollar costs like $100,000 a year. And there has to be, when we were looking, there just has to be something in between the QuickBooks threshold, the QuickBooks and spreadsheets, and like the Sage or NetSuite. That is really what we're building for, and we're starting in ag, and we'll be in, ag is sort of the heartbeat of everything that we're doing because it's just such an interesting, such a multifaceted industry that even AgTech is I think a false label for a lot of these types of businesses. They are not just farms, as we kind of talked about. They're trucking entities, and they're processing facilities, and they look like manufacturing plants. They look like services. They look like real estate, right? They're super multi-industry. And I think that's oftentimes why just farm accounting software doesn't actually even cut it for a lot of these. It's almost too simple or it doesn't actually have everything you need for these types of businesses. And so, that's a lot of what we talk about. A lot of what we also talk about is just the potential that we see with fintech being able to enable a business model that doesn't require us having to charge higher and higher fees directly to our customers, but instead be able to take a cut that normally would otherwise go to Visa, right? Or otherwise would go to a bank or a lender, right? Like Ambrook is, because we're software that's in the flow of funds, we're able to actually ourselves have kind of these win-win situations that the better our customers do, the better Ambrook does. And I think that's I think the creativity that you have to get when you're working with customers who just have like really, really small margins.
Okay, so much to unpack there. A lot of great things. So I totally agree with you that I think you need to. We were just had a conversation with Mark Brooks about this of when building a company, especially a venture-backed company, you need to have ambition, and I think you have to be able to zoom out and say, what can this become? And you have to instead of being at the beginning, you have to solve a very real, specific problem, get your first customers. So as CEO and founder, right, you have to deal with this tension of make money, solve a real problem, but then at the same time have big ambition and don't pigeonhole yourself to that maybe that initial problem you solved. So I love that. And I love this idea, this is like classic vertical SaaS, right? Is you take a specific industry that has unique complexity and challenges, and you solve that unique problem, and you can fit there's a market need there, like you just laid out. So I want to dig into this a little bit more. 26 million is a huge round for, and a software company. So can you what's the conversation? If you could address maybe two things that I'd love to dig in on. One is, what is that money going towards, especially in a day of building software with AI, I think is, top of mind for a lot of companies and investors. So just use of funds, I think it would be awesome to dig into. And then how, on the tail end of that is the addressable market. Like how big can this be?
So talking about use of funds for our fundraising round, and I think there's two ways, and I think you're right. One of it is, I think that every SaaS company or every software company has to answer today, like, what are you doing? What are you doing given just all of the changes that are coming that are already here and will be coming from the introduction of AI, basically everything else that is exciting and important about running a business. And there's obviously an interconnection between the two. I think just in terms of excitement that we have, in terms of where we can go, in terms of listening and solving customer problems, is a really big feature that we're launching this year alongside a lot of design partners in our customer base is inventory. That's a real example of us being able to lean into these asset heavy, balance sheet heavy businesses. Ag is obviously, there's a ton of assets and liabilities in ag. But even more specifically within ag is one of the only industry, I would say, where your inventory gets birthed and dies. And I think that is actually a really unusual cycle for inventory. If you look at more off the shelf things, and certainly QuickBooks, like something like that, doesn't address that type of dynamic. And so you need to have different costing structures, right, in order to accommodate for that. And so that's something that we're excited about. We're excited about building out a lot more features like that can help our customers much more quickly understand their true cost of production, because that is the North Star of what we're building toward. Anyone, no matter what your financial education or background, should be able to come into Ambrook and be able to really easily understand, where am I making and losing money in my business, and where can I actually take risk and ingest capital to enable me to grow. and stay independent, whatever the goal is there. On the AI front, I think that really where you're actually seeing value accrue in the market today is where teams can consistently and teams like who can repeatedly translate LLMs into products that people want. I think is like the most concise way to talk about what value is in that. And there are teams that have failed to do that really well, and there are teams that have done that really well. And for us, what that means is not just what are we doing to build that into the product, but it's also about how are we changing how we build internally and what is possible basically in terms of efficiencies for us, so that we don't actually have to continue raising, tons and tons of capital. Maybe we actually can scale with a much leaner team, right, who can do a lot more because we're able to answer a question from our database with LLMs rather than having to hire a team of analysts to be able to get that type of business insights for ourselves. And every learning that we have there, we can then translate into our product because uniquely, we essentially are building the thing that our customers also need, right? And so there's a lot of, I think, empathy that we can have from dog fooding a lot of our own concepts into actually building things that are useful. I think the failure case here is when you see teams just stick a chatbot on something. Sometimes that's helpful, but it's not actually the thing that is really interesting. It's actually what can you do now that you weren't able to do before.
Mackenzie, I want to talk a little bit about switching costs. I think accounting is something that's relatively sticky where people you have their accounting. It's really hard to make a move, just like your doctor, financial advisor. And there's a huge seasonality component where in the middle of the season, trying to sell a grower on new accounting software, they're probably, that's punted till the off season. So maybe talk to us about kind of the switching cost aspect and the seasonality of the business.
Yeah, totally. So I think there's there definitely are seasons in accounting software. You see a Q1, Q4 emphasis from a lot of marketing, sales, et cetera, from all sorts of back office software, but accounting software specifically, because that tends to be in line with how psychologically people think about the year or tax cycles. For us, because we actually don't just do the accounting side, we also are an invoicing tool, right? We're bill pay, we're a deposit product with cards, and it's a little bit a la carte. Our customers can choose to use what they want. I think that actually offsets the seasonality a bit for us as a business. But I think in switching costs, it is a real thing with switching costs. And you just have to build, you have to either be willing when you start. So for anyone who's thinking about starting a company that in a sector where there is high switching costs, the great thing is that when you get people switched over, it's a moat, right? But to start, you have to find the people who are, because you're not going to be able to have every feature one-to-one, and you're also not going to necessarily even have all the tools to help migrate data over. So you have to find the people who have the big enough pain points and are willing to do a clean switch or cutover rather than needing to have all of their data migrated over. I think that's like your innovators and like the crossing the chasm normal curve, that those tend to be the people who have the high enough pain points and are willing to do a clean switch over. And then you basically learn and build the product from them. And then as you essentially get feature parity and you build the migration tools, it essentially makes the switching costs less and less over time. Because you should just be building better software and you should be building the tools that make it really easy to switch into your software. And the moat then becomes like you just have excellent, best in class software for the specific target audience that you're building for. And for us, that is US agriculture, and increasingly will be other types of business over time. But like when you have that is the benefit of focusing on a niche, is that especially with inventory coming down the pike and some things we're doing with sales data, I think we actually truly will be best in class accounting software for agriculture for the modern era.
Makes a ton of sense. I mean, and when you do have that adoption and farmers are using your platform, you alluded to it before, right? Like there's other business models that can come to life when you're at the center of the farm, accounting, business, financial world. There's a lot of opportunity there. Mackenzie, I want to get into, we talked about fundraising, really exciting. Now I'm sure it's like heads down execution. What are you guys focused on right now? What's top of mind for the business? What are the biggest priorities?
Yeah, so it's two things. One, it's prepping for Q4. The nice thing about a slightly more seasonal business that you actually can make long-term investments in the team and the product in sort of a Q2, Q3 season. So it's prepping the team and all the infrastructure we need in order to support a Q4. You basically, in a seasonal business, you look year over year. So basically you compare this Q4 to last Q4, this Q3 to last Q3, that type of stuff. That's one thing. The second thing is just we actually are, literally building inventory. That's one of the biggest projects we're building right now is inventory. We're also building out some of these other product features that I'm really excited about to share when they launch, but that is top of mind for us.
Mackenzie, when you look out at the AgTech landscape, it's quite broad. Like, what kind of mistakes do you see others in the space making?
Oh, I would be hard pressed to point out other people's mistakes because I feel like I've made so many myself. I think one deliberate choice that we made, and I wouldn't say this is necessarily a mistake at all, but it's something that I've always been a bit curious about, is the decision to sort of early on raise from a lot of ag tech investors versus more generalized investors. And we just ended up, because of my network, ended up going the more generalized investor route. But I've always been curious about the ecosystem and the ability to sort of that more like ag tech specific VCs in that ecosystem. It's just not something that I have spent a lot of time in. Just like whenever we do fundraise, it's tended to be either preempted or just very quick. And so then I do go back to building in that way. But yeah, I think that's one thing that it's not a mistake, but it's more just that is actually a choice. I think that a lot of ag tech founders end up making early on. I think I've watched them tend to track into one or the other. I don't know. I'm curious. What do you guys think about that?
I think that was one thing I noticed about your cap table, right? Is it's not the usual suspects that we see in ag tech. I'm endlessly fascinated about cap table construction and investor makeup, and I think you're onto something there, because I think ag tech investors that have a thesis in agriculture and in ag tech, they often have like very strong opinions about what the future of ag tech could look like, market sizing, all these things. And I think there's 100% a place for that. And I believe in the ag tech thesis. But I think it's also important to like have dialogue with other investors outside. And I think in your example, you could be talking to investors that know software super well. And you can say, hey, we're going after this specific market that we know well. And I think there's like synergy there, versus if you bring farm software to an ag tech firm that's invested in 10 ag tech software companies, maybe there's heartburn there. Maybe there's history there that hasn't been as successful because ag tech as a sector maybe hasn't been as successful in software. So I think that's really interesting, and I think a lot of people can take away with that. For one, just doesn't mean don't raise from ag tech investors. It means cast a wide net, have a lot of conversations, because there could be value in I think a diverse makeup of investors.
Yeah, I think the best advice I got was just try to be as diverse as possible and maintain optionality. Our cap table also, I ended up taking on some angels, so I thought had really good perspective on the ag tech ecosystem, and I think that has served us really well so far. And I think also it's just maybe advice I'd give is every round is a new round. Like every round is a new chance, to think about the business, to think about your cap table, to think about who you want to have on that for that phase of business. And I think for us early on, the problems I anticipated us trying to solve were actually just like software fintech problems, maybe vertical SaaS related problems. I think maybe as we scale, depending on where the problems are going to be in Series B, Series C, it's a chance basically to reevaluate it. How do you think about strategic, right? How do you think about niche industries? How do you think about, I think the nice thing about a lot of these ag tech investors is that they do have deep connections, especially as you move to the market. They're actually a little bit, I don't know, but my sense is that like SMBs, you kind of you're on your own to like get sort of like the direct to farm on the SMB side. Every company just needs to figure that out through their seed and Series A, but especially as you move into where partnerships become super interesting, distribution partners especially, that's where I think a lot of those more strategic players can play a really good role.
Well, Mackenzie, this has been a lot of fun digging into building a technology company in the ag space. As we wrap up, how can our listeners get in touch and connect with you and Ambrook?
You can always go to ambrook.com to learn more about us, to learn more about the team, and potentially if anyone is interested in working with us, we are growing our team. So ambrook.com/careers. We have a lot of roles listed. We also have an option basically to craft your own role. So if you don't see a role that might fit, just like shoot us a note through there. And we try to get back to as many people as we can on that. Sometimes we miss some, but yeah, it just would be great to hear from you.
So Ty, what do you think of the conversation with Mackenzie?
I liked the format we did. We just kind of dug into how she grew it, how she's growing the business, obviously the details of the fundraise, but Tim, you hit on it before, but I just think that there's a lot of value in having a direct relationship with a farmer. I think one thing we've seen is the farmer can only have so many direct relationships. Like the farmer's time and attention is limited. So having one of those, five, I don't know what the number is, but 5 to 10 relationships where you have the farmer's attention is so valuable. And if you have one of those slots, how can you maximize the value both for the farmer, but also for you and your company, right? So I think she has a good sense of that. Of hey, if we get adoption and the attention of the farmer on the accounting side, there is subsequent value to provide the grower. So I think AgTech companies need to figure out, like how do they fit into that? What is their strategy? Are they going through distribution? Are they getting to the farmer through one of these trusted relationships? Or are they trying to establish that direct relationship?
Hope you guys enjoyed this episode. We'll be back next week with another good one.